Nvidia has a market cap of roughly $550 billion compared to Apple's nearly $2.5 trillion. We believe Nvidia can surpass Apple by capitalizing on the artificial intelligence economy, which will add an estimated $15 trillion to GDP. This is compared to the mobile economy that brought us the majority of the gains in Apple, Google, and Facebook, and contributes $4.4 trillion to GDP. For comparison purposes, AI contributes $2 trillion to GDP as of 2018. While mobile was primarily consumer, and some enterprise with bring-your-own-device, artificial intelligence will touch every aspect of both industry and commerce, including consumer, enterprise, and small to medium-sized businesses, and will do so by disrupting every vertical similar to cloud. To be more specific, AI will be similar to cloud by blazing a path that is defined by lowering costs and increasing productivity. I have an impeccable record on Nvidia, including when I stated the sell-off in 2018 was overblown and missing the bigger picture, as Nvidia has two impenetrable moats: developer adoption and the GPU-powered cloud. This was when headlines were focused exclusively on Nvidia's gaming segment and GPU sales for crypto mining. Although Nvidia's stock is doing very well this year, this has been a fairly contrarian stance in the past. Not only was Nvidia wearing the dunce hat in 2018, but in August of 2019, the GPU data center revenue was flat to declining sequentially for 3 quarters, and in fiscal Q3 2020, also declined calendar Q4 2019. We established and defended our thesis on the data center as Nvidia clawed its way back in price through China tensions, supply shortages, threats of custom silicon from big tech, cyclical capex spending, and on whether the ARM acquisition will be approved. Suffice to say, 3 years later and Nvidia is no longer a contrarian stock as it once was during the crypto bust. Yet, the long-term durability is still being debated. It's a semiconductor company after all. Best to stick with software, right? Right. Not to mention, some institutions are still holding out for Intel. Imagine being the tech analyst at those funds, if they're still employed. Before we review what will drive Nvidia's revenue in the near term, it bears repeating the thesis we published in November of 2018: Nvidia is already the universal platform for development, but this won't become obvious until innovation in artificial intelligence matures. Developers are programming the future of artificial intelligence applications on Nvidia because GPUs are easier and more flexible than customized TPU chips from Google or FGPA chips used by Microsoft, from Xilinx. Meanwhile, Intel's CPU chips will struggle to compete as artificial intelligence applications and machine learning inferencing move to the cloud.